Joining us now, George Heppel. He's the Vice President of Commodity Research at BMO. George, great to have you with us.
Thanks for having me.
You know, it's funny that we had this list of fundamental reasons why the metals would decline today, and yet the move has been sort of meme-ish, which is, by definition, not pinned by fundamental drivers. So what did you make of the drop today?
Of course, well, I think silver has obviously had an outsized move against gold over the last few months, and this is arguably sort of an understandable correction. I think silver really has entered kind of meme investment territory over the last week. I mean, there were times earlier this week when some of the silver ETFs were seeing inflows several times larger than the SPDR S&P 500 ETF, which I think goes to show just how sort of exuberant the attitude has gotten to silver. But there's also been really strong physical silver demand as well, especially in Asia. So especially in India and China, we've been seeing huge silver premiums over the last few weeks, and crucially, that was never going to last. I mean, in the case of India, there's been a lot of buying ahead of a change to duty, basically a hike in import duties on precious metals into India. So that comes in on the 1st of February, this Sunday. So obviously there was a lot of buying ahead of that. In the case of China, we obviously have Chinese New Year coming up in a couple of weeks, and I think there was a lot of sort of panic buying ahead of that because gold and silver as precious metals are typical gifts and investments you give during Chinese New Year. In the case of silver as well, there's a lot of pent-up industrial demand because a lot of factories tend to buy large amounts of silver ahead of Lunar New Year. Now, normally this wouldn't contribute to price in the way that it has, but you've got that physical demand in Asia combined with the sort of meme stock territory that silver has reached in the West, and also being dragged up by the wider machinations in the gold market, and it just created a perfect storm which sent silver to 120. Now we've got the gold silver ratio at around 60, I think, as I'm speaking. Our analysis suggests that we think the silver market is likely to sort of unwind and sort of move into a physical surplus going forward. So we think there's a likelihood that silver might get dragged up by gold in the future, but generally speaking, we think silver's probably going to underperform gold going forward.
So that's the relative trade, but you actually do think that gold can sort of gather itself here and make another run higher?
I think there's an argument to be made that sort of the consolidation that we're seeing at current levels is probably healthy for the market. I mean, 5,600 was obviously a pretty unsustainable rally that we saw. I mean, we saw gold repeatedly above its 100-day moving average for weeks on end, I think, and obviously that couldn't be sustained. So this kind of blow off top that we've seen is probably healthy. I think the underlying drivers which have sort of driven precious metals to their current level, stuff like debasement concerns, de-dollarization, inflation concerns, I don't think any of that's necessarily gone away. Do I think that gold is going to have another 100% year-on-year rise? Probably not, but I think I haven't seen any. I haven't seen any removal of the initial drivers that sent precious metals running up here in the first place.
Is Kevin Warsh a main, anything that you look at in terms of seeing the flush today and saying, okay, strong dollar because of Kevin Warsh and therefore weak metals?
Yeah, I think that's also a key driver of it, as well as the sort of blow off that we saw in the AI stocks today as well. Kevin Warsh, obviously, he's committed to a smaller Fed balance sheet, and that is inherently bearish for precious metals because it implies, less money in the system. So whether or not that's achievable is obviously a complete other thing, and I'm not qualified to comment on that, but I think that's certainly been a key driver for the precious metal bear market we've seen today as well.